Earnings reports to come so far this week has been Tesla, and that came last night. Now I want to bring on a very special guest, Rob Maurer, a host of Tesla Daily and an investor in Tesla. Now, Rob, I want to start by discussing Tesla's overall earnings, which did beat Wall Street expectations, and revenue was up 74% from a year ago. Can Tesla keep this momentum going?
Yeah, I definitely think so. I think what we're seeing a little bit with the sell-off today is probably a lot of excitement that tends to build into earnings, and then when there's no, massive surprise or something like that, although Tesla did beat, they were driven a little bit by some one-time items. When there's no massive surprise or updated guidance or something like that, investors kind of move on to the next thing. But for investors that are willing to take a long-term view on Tesla, which most people should be, this is a really, decade-long growth story as we've talked about. I think, there's a lot to be excited about from the earnings report yesterday.
Rob, how much money did they really make after you back out the credits and back out Bitcoin?
Yeah, so they reported a non-GAAP net income of just over $1 billion. Half of that was regulatory credits, so about $500 million there. And then $100 million came from the sale of Bitcoin. So Tesla in Q1 acquired about $1.5 billion in Bitcoin. They sold about 10% of their stake, somewhere around 50% profit on that sale, for about $100 million there. So backing out those things, they earned about $400 million, but on a non-GAAP basis. On a GAAP basis, they did still, technically, if you back out the regulatory credits, they did still have a loss. But that's not a great way to look at it. Tesla has super high stock-based compensation right now because of Elon Musk's CEO compensation plan. $300 million of their stock-based compensation this quarter was because of Musk's plan. That's not going to continue. There's only about $700 million left in total on the plan yet to be recognized. So if Tesla continues the pace that they were at in Q1, that's only going to continue for a couple more quarters. And I think over the next few quarters, we're going to see that decline anyway, as it's just going to take a little bit longer for the rest of that to be recognized.
Do you think that people know that? Because I'm wondering whether that's the reason why the stock is down.
Yeah, I think people look at it and they see the regulatory credits. That gets all the attention of, Tesla's still not profitable on a GAAP basis without regulatory credit sales, but no one factors in these other one-time things. It's kind of like we pick one cherry, but not the rest of them.